We're going to take a look in this video at a trade entry that happened on March 28th, that's last Thursday, on a pair that's in our new updated top 30. And I'm going to use this video to run you through pretty much the whole analysis we would do of an entry signal to decide whether or not to take it. And this was only a few days ago, so the signal is also, for some of you, potentially viable as an entry to a new top 30 trade. So if we go to our trading signals, we'll see here on the 28th of March, there was a signal to buy long Salesforce versus INTU, and it's 64 shares long and 38 shares short, and the deviations that the close caused was 2.04 negative deviations, so it triggered an entry stretch because we're on a 2 entry stretch for the top 30 US equities pairs. We've also had a couple of exits outside of trading hours this morning. A couple of profitable ones. That looks interesting too. But okay, let's go through this entry. So the first thing you would do once you get this is go to the watch list, find the pair, and I would like to look at the backtest results to see why we put this in and whether it's still looking good. So this is on the watch list. Last 2 years there were 7 trades. It's correlated at 88.6%. It's co-integrated at 0.97, so it is co-integrated. We've had a 20% compound annual growth rate with less than a 6% drawdown, 100% of winning trades, infinite profit factor, about $5,000 gross profit, and an average net profit a trade of $609. It's also a pretty fast and efficient pair. 19.5 days in the trade. If you look at the equity curve, bottom left to top right, very nice curve, what we want to see, tight, no big drawdowns. Even more importantly, the ratio graph, very flat, going across the 2 years, and up and down on both sides of that ratio, looking good. This latest entry is down here, might be slightly outside of a range, could be a bit of a breakout. We need to be careful. Let's look for some further analysis there. Okay, so that's the why we chose it. Now let's look first at these companies. Who are they, what are they, and why would we pair them up? Well, Salesforce.com is a $122 billion market cap company with a beta of about 1, all right, and it is in the technology sector, software applications, 35,000 employees, based out of San Francisco, and it's traded on New York Stock Exchange. What do? They make enterprise cloud computing solutions for all types of selling, Salesforce management, customer relationship management. And they do that all the way from the biggest companies all the way down to some of the smaller companies. And that we've paired with another company called INTU, which I'm sure most of you have heard of. INTU is about a $68 billion market cap company, same beta, very similar valuation metrics, by the way. We won't go into those. And this company is also in the technology sector, software application, 9,000 employees. It's based in San Francisco, Mountain View. And what do? Well, you've probably heard of them. They make QuickBooks. So they sell QuickBooks as software as a service, all the way from some of the bigger companies down to the smallest companies and retail consumers. And they've been doing that for a long time, very profitably. So 2 very well-established software and applications providers that we've paired together. And that's who we're looking at. So what happened on Thursday? Well, there was this signal here, minus 2.04. So the next thing we would do, once we like the fundamental fit, is go to the news. And we've quickly pulled up the news on INTU. And if we look at last Wednesday, last Thursday, nothing really here that would move it. It had one of its competitors report earnings on Thursday after the close. That probably wouldn't have generated the signal. So let's look at Salesforce for a few more clues. And if we do, we see that on Wednesday after the close, there was an announcement that Salesforce stock falls after lawsuit is filed. Lawsuit claims Salesforce sold tools to sex trafficking website. 50 women say Salesforce helped traffickers exploit them. So, it sounds like a pretty serious lawsuit. Obviously, the stock has moved on that news in a negative fashion. It's up to you to decide whether, being a $122 billion company with a phalanx of lawyers and a lot of experience in defending these types of suits, whether that's going to have a fundamental effect on the value of the company over the next 3 to 6 months or a year. We tend to think that these very large market cap companies with their legal teams have a way of reasonably defending these suits. So maybe that's an opportunity for an entry. I won't go into it more than that, but that looks to be what generated the entry signal here on the PairTrade Finder analytic. We also then would look at the relative performance of these two. You can see the very close correlation over the last year, and you can see the co-integration. When relative performance diverges, it reconverges. Diverges, reconverges. We have a big divergence here in relative performance going on. Will it reconverge? That's the question. That's what we're trading. Will this revert to the mean? Will these reconverge? And it's up to you to make that determination. You can look at the individual stock charts. This is in an uptrend, higher high, higher low, above the moving averages. INTU is also in a very strong uptrend, higher high, higher low, above the moving averages. So they can both be trending. The question is, how are they trending relatively speaking? And this widening up, you got to ask yourself, is it going to close? So that is the share trading share graphs of the two that we would always look at as well. Now, quickly you would go to the fundamentals to just check earnings and dividends. No dividends on Salesforce, don't have to worry about it. Earnings are coming up at the end of May, beginning of June, lots of time, 2 months. Same thing on INTU. Earnings are at the end of May, lots of time. However, they do have a dividend, small one, and that's getting paid it's going ex-dividend in about 10 days time. So depending on your trading plan, that might disqualify this pair and this signal for you. Others would say it's a very small dividend. It looks to be about, that's the annual dividend, so it's about 0.1%. We're usually looking for a couple of percent on a pair trade. Is it going to cause you to throw out the trade? Maybe yes, maybe no. Up to you. That's earnings and dividends, relative value. Let's go and look at the pair charts and see how it did. So it triggered here, where historically it's also triggered. We look at the percent from mean. It's well within and sitting on a support line of where these entries tended to get to. This one you definitely would have wanted to use layers. And here we're sitting at -4%, which is right on the max over the last 2 years, but not breaking it. So potentially a very good entry. And then over here, if we look at the ratio, it's broken out a bit from the lowest levels of the last 2 years. We have a beautifully flat line. Might be a cause for concern, the fact that it's broken out. However, do you want to look further to see where we can have some kind of potential reversal signal? And here's the RSI chart. Depending on how you read divergences, look for divergences. Some people might say, well, okay, here's a low, here's the next low, so lower low, still trending. Here's a low, here's the next low, still a lower low, so no divergence. However, you might look short term. Remember, this is a 2-year graph. You can shorten those up in systems preferences. But here's a 2-year graph. So over this big downtrending of the ratio here, that was being replicated in the RSI, but the RSI is now trending upwards, even though this is trending downwards. So that I would read as a divergence. That suggests that, and by the way, it got to a very strong extreme, about 17 on the RSI. And so that looks to me like there's a divergence, and that could be another good signal for entry if you build that into your trading plan. So on the basis of that, it looks pretty good. We would also always look at, and you can just see this very quickly on your watch list, but you still got 85% correlation, so that hasn't broken down, and your volatility is 2%, which is a pretty normal volatility, 1 to 2% on a typical pair, which would mean we would use a full size entry on this of 10,000 a leg. So that's the analysis we would do, and if based on that analysis you think it's an interesting signal to trade, well, what you can do now in new Pro version 138, this is this great new feature we've added, which is resend at market. You look at this this entry. If you hit resend at market and you're trading with interactive brokers, it will show you that this morning, before the market opened now, the entry signal, the entry stretch triggered because we have an entry stretch of 2, and it triggered at negative 2.04. The ratio when it triggered was 0.6255. And on the current ratio, based on these share prices before the open on Monday morning, you are actually in a better position. Hang on a second, I'm not going to send that yet. You are actually in a better position than when this signal triggered. Okay. If we look, actually you're not. Okay, it's a little bit worse position, but you would decide whether or not you still want to take the trade based on where it is today at market. And if you do, you would just say send trade, and what happens? In IB, we just go straight to the API screen, and we have this trade resized for the current prices, and you have INTU going long 38. Here's the buy. Sorry, these makes it easier to see. So let's get rid of this. So you've got, selling 38 of INTU at 261.41 because it always fills the short leg first, and when 100% of that fills, it will then do the CRM long at market, which is going to be approximately, we don't know because we don't know exactly what the price will be, but it's going to be approximately 64 shares long, depending on what the market price is. So that's a great new feature, this resend at market. You can instantly generate from historic trade signals. You can instantly generate an order to send to IB, and then use that to re-enter trades or exit trades that have been called previously. Hope you enjoyed that review. It's an interesting signal on a great pair. We hope you like what we've added to version 1.38 and our updated top 30. Happy trading, everyone.